All right, part two. Welcome to part two of the Hidden Monkey Daily Update. Um, all right, so I covered basically the foundation of a trade and how to go about doing it with Doe and Tasty Trade. Again, that will be your basic foundation. And if you want, you can trade a whole bunch of stuff that way. Go to your grid page, go to your notables, and what's great about what's going on in this market is if you go here to your filters, hide earnings, and go move this to I rank 50, okay, there are, look at this, and you can sort by sort in descending order. These are every single stock with IV rank above 50%. Okay, so you can do the same thing in every single one of them, depending how much capital you have. Now, Karen the Super Trader, if you listen to her videos, she used to do covered calls and she went to iron condors or whatever, but she finally got away of actual indices, actual stocks, because she was tired of getting burnt by earnings or something. So she likes staying with the SPY because it's liquid and she's doing a lot of money, and she doesn't have to worry about that as much. Okay. The hard part has been is that has been no volatility in the SPY a lot lately in the last, it's been such a bull market. So she was doing it the same thing as we did, but in a lot lower IV, when IV rank was a lot lower, volatility was a lot lower. That's when it can get tricky. So with the market trading like this, it's not a time to be scared. It's a time to, if you haven't been trading, it's great for you because you don't have to suffer through the transition. When IV rank is high like this, you can go ahead and put on multiple positions, and you could even go larger in size if you want. All right. So here's the SPY. As you can see, I have multiple positions on. I'm going to put more on because IV rank is falling a little bit, and I want to capture that. I don't want to miss out on that. But the hardest part of trading is when your IV rank. If let's say you're let me zoom out. Okay, this is a 52-week chart. So you see how most of the time, like over here, volatility was below 25, IV rank was below 25. Well, Karen the Super Trader, she can't just not trade. So she's been trading. Okay. The hard part is when you're putting on a bunch of trades when IV rank is this low, right? And all of a sudden, then IV rank starts to climb. Your positions are going to struggle. This is where you have to manage your position when the IV rank is going up, while you put on all these positions over here. Yeah, that's why it's been challenging. But if you were waiting and you haven't been doing that, and you only put on positions like now when it's higher, right? You're not really suffering that much because even if you put on a position here when IV rank was 39, it's only been 1, 2, 3, 4, 5, 6, 7 trading days, right? And yes, IV rank climbed, right? But it's dropping down. So this is where most people will struggle. If you wait till IV ranks above 50 or more, look, you only had to wait 4 days, well, not even 3 days, and IV ranks are already coming back down. That's why when you go to I have so many positions on. If you go to the Doe page and you look at my portfolio section and you expand all my SPY, you know, oh, by the way, you can see this is percentage gain. If you want to see it in dollars, you just click on the gear, unclick this, and it'll show you in dollars. I like looking at this percentage because I like being able to see when I can take off a position when it hits 50% of max profit. Anyway, so if I expand on my SPY positions, you can see, right? I'm doing okay because where's that position of mine? Remember yesterday I talked about how I rolled my 192. See, there you go. Okay, so this position is up. Okay, so that's when you're going to struggle the most. But once you're up here, oh my gosh, it gets fun. All right. So yesterday I covered this, and I showed beginners how to put on this Fibonacci retracement. Basically, it puts these little support lines on if you start from the high and you go down. And I highlighted this 50% one in yellow. Okay. So the reason why, and that's at 193.69, and you guys all know that I have a 190 put um, a put spread on, right? So meaning I'm betting the market will stay above 190 by the end of October. All right. So the reason why I did this is I don't know if I'm right or not. I just thought it was interesting when if you scroll, I'll zoom out a little bit. Oh no, let me do this. Okay, see the last time we had this high IV rank pop? Okay, so I'm going to start from this high here, right? Right click, go to add a drawing, go to Fibonacci retracements, and I'm just going to bring it down to where my chart ends, and I'll stop. Look, what's interesting is look where, I don't know if you can see, but that's his 50% right there. You know what? I'll try and change that color to yellow. I'll go to edit property just so you folks can see it. Change this to yellow, hit OK. All right, look where the last time it took a drop, look where it retraced to. Almost touched this 50% line, right? And then it started to rebound. But look, even when it got this low, OBV cross was all the way down here. Slow stochastic was all the way down here. Then it started to rebound, and IV rank volatility started to collapse. Well, look where we are now. I'm going to fast forward here. Okay, so look where we are now. Let me delete this to never mind. I hope you guys can see it. Anyway, whoops, my bad. Let me just remove these drawings real quick. See, it makes it easier for you to see. And I will remove drawing. I don't want to remove all that drawing. I just want to remove this drawing. There we go. Okay, so I'm going to zoom in over here. All right, so look where it is now. It went way below the 50% support, and it bounced back up, and it's finishing right here. But if you look, OBV cross, all of a sudden it's, let me zoom out just a tad. Oops, and I'll slide it over just a little bit. Okay, so on balance volume is not green, but it's going up. But that means there were more buyers and sellers. There are more buyers and sellers right now, which is what brought the market back up. Okay, and basically it finished up 0.2%, or basically even for the day. That's not what the bears wanted to see. But slow stochastic is red, and it's below 50. See that it's at 40 right here. So it hasn't hit the bottom yet. Usually you expect to hit the bottom before it turns higher. Okay. So I don't mind, to be honest, I don't mind this choppiness. Okay. And what I do like is IV rank collapsing like this, because if it collapses, all my premiums will come in, and that's where I'm gonna make the money. So I don't care if it trades in a range, because remember now, when we do the golden geckos, we have calls, we're betting it'll stay below 202, 203, 205. It's got to climb all the way back. So I don't mind if it stays in this range at all. I just thought that was interesting. Will it kind of go sideways on here? Will it test it again? I have no idea. But I just thought that Fibonacci retracement was interesting. Okay, let's go to the ES real quick, because that's what's happening right now. Let this load up real quick. All right, and I'll zoom in. Oh yeah, these are the Fibonacci retracements I did yesterday. I forgot to take off the drawing. But anyway, this tick is today, right? 10/2. You can see in the bottom the date. And this tick is after hours. And it's basically even. All right? So nothing much has changed. You can see that, right? There. So as you can see, OBV on balance volume is flattening out. Slow stochastic is still red, but still pointing up. We'll just see what happens for tomorrow. And that's pretty much it. Now, like I said, you could trade all the other trades. Go ahead. I just like sticking with indexes. Why? Because I don't want to worry about earnings or whatever. And I did play with a lot of the other stuff because IV rank was so low here in the SPY. I had nothing else to do. So when it was low like this, I just played around. I did all kinds of other trades, which you can follow along the forum. But if you can master the first part of today's update and just know how to put on these trades, you'll be fine. And then from there, once you master that, just learn how to manage those positions, and you'll be okay as far as adjusting them. I've got a few minutes and I can walk you through that real quick. So how do you adjust a trade? Let's say it goes against you. All you do is, and I'll do it on SPX real quick because it's clear. So this is SPX. It's a much larger index. You only do this because it's $1,946 a share. Karen does this because she has trading with a lot of money. But let me just kind of walk you through real quick. As you can see, this is a much easier screen. You can see where the 1 standard deviation line is right here, and the 2 standard deviation line is right here. When volatility is high, what she likes to do is she likes to pretend the market dropped 100 points and then take 12% below that, which takes it about to the 90% standard deviation line. So for example, if I do this and I do what she does, strangles or whatever, or you know what, I'll just do a vertical put. Okay, short put vertical, which means you're betting it'll go higher than a certain number. And I'm going to change this. Oh, that's right. I'll just leave it like this. Okay, so let's say you have this position on. Okay, so what you are doing is you are betting that you have an 86% chance of being right that the SPX will stay above 1825, and that's 86%. What Karen does when high V is ranked like this, she'll move it. Remember now, she's doing more like a. This is what she's doing, basically a strangle. I'll just clear this to be easier. Okay, but what she does is she moves this out to where it says 90%. Okay, so she has a 90% chance of being right. Why? Because she's betting that the S&P 500 will stay above 1,805 by the end of 50 days. Okay, so she has a 90% chance of being right, 91% chance of being right, and she's going to collect $10.60 credit for that. That means for every one contract, she's going to collect her max, or she can make $1,060. Okay, but you got to have a lot of capital because look how much, you know what I mean? And she puts on about 500 each trade. She does about 500 contracts. Okay, so do the math. Each trade is almost 100 grand. About there, something like that. That's how big she's trading. If you want to, the reason why I did it in SPX because it's less messy. But here's where I'm at. If you go to the SPY, it's the same thing. Choose a strategy. Go to vertical. There you go. Do a short put here. Okay, so here's how you would adjust it, just so you know. So let's say it starts going. Look, we have a. If you click on the link, look right now. If I do this particular strike, I'd have the 182 put. I have a 86% chance of finishing out of the money. Okay. Now what she does is, and I'm gonna delete this anyway. This is just for teaching anyway. So what happens is, let's say I have. Okay, look. Like let's say I have this 190. What do I have on right now? The 190, right? That's 190 put. So right now I only have a 64 probability out the money. 72% pop. Okay, 64%. The difference is break even and making a penny. Okay, but here's the deal. What she does is she'll move this position before it gets too close. Okay, because I only have a few days left for this. This is November, by the way. So my expiration is October 31st. That's why it's different probabilities. In fact, I could just check real quick. There we go. Okay, so I'm still at about a 76% probability of profit. That's why I'm leaving mine here. But what she does is let's say your position is getting tested, and I'll move this back to the November. What she will do is she will roll it, meaning she'll close this position and move it out till it gets back to whatever, 80%. Okay, and then she'll collect what she can there. That's all she does. She doesn't wait for it to go in the money like this. She's no way. She'll move it. She'll close it and she'll move it. Well, Mark, what happens if she, what if she loses money? Yeah, then she'll double. She basically collects more money. Okay, so what I mean by that is, let's say you sold this for $1 and you buy it back for 50 cents. I mean, you buy it back for $1.50. Okay, so that means you lost 50 cents on the deal. Okay, all she does is move her position out over here, and whatever the credit she gets over here, she adds on or maybe does another position to make up that 50 cents she lost, and that's it. So that's how she stays out of trouble. It's pretty easy, and you can do that by rolling. I covered that. If you look on the thread, I covered that in a video as well, and I put it under the Golden Gecko section as well, under managing positions. If you go to the forum and you just go to the menu here, most of them are right here in their Golden Gecko, and I think I did a recent one. Yeah, how to manage Golden Gecko, how to roll. They're all over here. I also did one in my in the YouTube on my YouTube channel in the video.